Hey, good morning yesterday. It was a bloodbath yesterday. I would say that we've not seen that kind of a day on Wall Street in several years. And so I think it was a wake-up call that folks need to understand that this market does have some volatility in it, and folks need to be prepared for that. If you're not ready, if you don't have an exit strategy in place, if your broker doesn't have an exit strategy in place, then maybe it's time you sit down with us and let's go through our financial x-ray. Give us a call at 863-382-0037. That's 863-382-0037 to schedule your no obligation financial x-ray to look and see how much risk you really have in your current portfolio. Don't wait until it's too late. Do it right now.
5 point. Back in time, that's Donna Lewis there. It's 8:37 here, 23 before 9. Time to check out on your money, what's left of it, and see what's going on Wall Street. Really rotten day yesterday by any account on Wall Street. Let's check in with Phillip Statler from Statler Financial Services. Phillip, good morning. How are you today?
Good morning, Dave. Hey, doing well today. It's yesterday was, hey, it ended up being worse than when you and I were talking yesterday morning.
Oh, boy, yeah, we really tanked like crazy, down 1,000 points plus on the Dow yesterday. Third worst loss in history. I mean, it sounds like we're falling off the edge of the earth, and there's no way you can sugarcoat a 1,031-point drop. Always got to put a little bit of perspective on it, though. Back in the crash of 08-09, lost 530 points in one day, and that was 23% of the market. We were only down 3.5% yesterday, so it was El Stinko, but you always got to keep things in perspective too, right?
No, that's right, because those indexes have gotten so high, the dollar value versus what we've seen in the past compared to the percentage changes become somewhat relevant, and you've got to put those things in perspective as you look at those and the ups and downs.
Absolutely, but we still got to say, we were talking yesterday about the number of corrections in a year and whatnot. 10% correction for a year is normal, and we're used to a couple 3-5% in a year. At the very least, that's conventional wisdom. Well, anybody counting 5% corrections, we fixed that problem inside of about a day and a half. Now folks can start crossing their fingers that we're going to turn around, and it's not a guarantee by any measure, is it?
No, it's really not, Dave, because we just don't know. I mean, this coronavirus has got things upset, and so I did hear a little bit of the World Health Organization yesterday saying, we're not going to call it a pandemic yet, but it's definitely starting to spread out and reach close to those types of numbers. And so when they actually, if they actually make that call, I think that will be another point in the sand to say, okay, what's that going to do to our markets?
Yeah, I'm kind of hearing the World Health Organization sounding like an old John Wayne movie. I'm not going to hit you. I'm not going to hit you. The heck, I'm not going to hit you. Remember that?
Yeah, exactly.
In that range, I'm looking at my winners and losers list early this morning because we got a little bit of green ink. Of the 5 big gainers I've got, 2 of the 5 are pharmacy companies, and you got some news that one of them at the very least has some possibilities, huh?
I do. I've got a pharmaceutical company called Moderna, and it announced that it had shipped a coronavirus to the U.S. government research for study, with the first clinical trials expected by the end of April. Now, I got to tell you, the stockholders are liking that because that stock has got driven up this morning a little over almost 15.5%.
I believe that. That's optimism. Perigo is also going up. I think basically anybody with hope in their R&D department on a stock that they like is taking advantage of it. Got to make the point, though, and you made a very valid one, that we're talking about clinical trials by the end of April. That's 2 months away, which means we got a rocky road ahead of us looking at the news items, don't we?
Yeah, we really do, because that's the clinical trials. Then they got to figure out if it's really going to work. So, that's the starting point. I'm not sure from there how long it's really going to take before they can put something in production if it works.
Absolutely. And the reaction to all the upset yesterday got us some stranges going on, among others, gold up to a 7-year high, bond yields at record lows as people went to safety and went to hedge your bets investments like gold. The world of finance is just in an utter state of turmoil over a virus, isn't it?
Yeah, it really is. And I think that I actually heard this morning that the U.S. bond, the 10-year, is still heading south. The yield is down to 1.37%. And I think, if I'm not mistaken, I think they said that was a record low.
I sure as heck don't ever remember seeing it that low. 30 years are down to 1.84. Kind of holding from yesterday morning. They went up a little bit yesterday and then right back down again to 1.84, but 1.37% in a 10-year Treasury note, that starts getting down in the direction of CD rates and actually lower than some CD rates.
Yeah, so it's going to be, you got to hope things start to at least turn around on some level here shortly.
Absolutely. We do have some interesting news, we'll call it at the very least, on some of the companies reporting this morning, don't we?
We do. I'm going to say probably the big guy today is going to be Home Depot. Home Depot beat by about 18 cents a share. Revenue came in above forecast. But probably one of their big things is same-store sales. They beat significantly. The same-store sales were up 5.2% compared to the 4.8% that it was expecting. And then they also raised their dividend by 10%. So that's some really good news from Home Depot, given what the winter kind of looks like. So it's up 3% this morning.
Cool. I'm trying to remember what Lowe's did when they came through a report, because those two monster lumber companies are almost a zero-sum game. Do I remember that Lowe's had an off quarter when they reported, or am I remembering something else?
You know, Dave, I see so many numbers now, I just can't remember that one.
It's not like Mattel and Hasbro where one goes up, the other almost has to go down, but it starts becoming that at one point. Home Depot, good for investors there. Other indications we got?
So I do. So we got Macy's, a big retail company, right? They had a good quarter. They beat by 16 cents a share. Also, revenue came in above forecast. They really had a pretty good holiday selling season and helped their same-store sales. Did fall a little bit, but smaller than expected. And so Macy's is, they were up a minute ago. They've trended down a little bit. They're down about 1/3% right now.
Not bad. Yeah, we heard some good preliminary numbers out of the Macy's group at the end of December, so it's good to know that turned into a productive report, isn't it?
Yeah, it is. Hey, let's talk about a household name that's been around since I was a little boy. Mm-hmm. Tupperware.
Oh, the burp.
The burp. So Tupperware were supposed to announce their earnings today, but they're not.
Why?
I'm not sure exactly why yet. They did come out and say that they're warning that they fell short of their full 2019 earnings that were, like I said, were supposed to be out today. They're having some accounting probes, I guess, because of something in Mexico, one of the plants there. And so they're getting hit pretty bad today. They're down almost 21% this morning.
Just saying you're not going to put your report out is enough to do that, isn't it?
Yeah, it really is. And I'm looking at the 52-week range. I mean, the 52-week low was $5.42. It'll open at $4.50 right now. And look at the high. The 52-week high was $31.66.
Wow. See, that's what happens when you can't find the right size lid.
Yeah. Those things can happen. So we got Intuit. You know, they reported 14 cents above estimates. You know, they're the tax software, the QuickBooks, all those kind of guys. And they better than expected revenue. They are buying Credit Karma for $7.1 billion in cash and stock. So they're trading up about 3% this morning.
Wow. We do have some bright news to be had in the process of all the upset from the coronavirus, resetting the table for the morning. Yesterday, as we said, Dow was down 1,031 points. We start off the morning an even 5% down from just 3 trading days ago, 27,960. NASDAQ down by 3.7% yesterday, down 355 points. And the Standard & Poor's fell by 3 1/3%, down 111 points. I'm seeing green ink this morning, but it doesn't look as good as it did earlier. Phillip, what we doing 45 minutes early?
Well, Dave, is actually bouncing back up. I know you're delayed a little bit, but right now we've got the Dow up almost 0.5%, 135 points. We got the S&P 500 up almost 0.5%, $15.37. We got the NASDAQ up 0.75%, almost $70 right now. So those indexes are looking really good. Flip to the commodity side of things. When we look at gold and silver, they are retreating. Silver's down 2.75% right now. That's down 51 cents an ounce. And then we've got gold down 1.4% to $16.53. I mean, $1,653 an ounce. I'll get it right in a minute. And we've got crude oil heading down just a tad to $51.40 a barrel.
We'll take that. I got to assume the gold going down kind of in the face of this is folks saying, ooh, quickie, buying opportunity, get in and get out quick type stuff, right?
Well, it could be, I guess it could be that. It could be that the stocks are going back up, so gold sometimes will head down because of that. Yep. A lot of times it'll act like the interest rates, but it's not doing that right now.
Yeah, it's not keeping up the normal pattern. Overseas markets, the Japanese markets were off substantially yesterday, about the same kind of percentage rates we were. Hong Kong curiously closed up by a little bit this morning. I'm almost thinking that might be dead cat bounce. England and Germany and the rest of the European markets generally off, and as mentioned, the interest rates on federal bonds down to darn near all-time lows. Phillip, nothing is working the way you expected to, but there's still a way to make money and have a fruitful retirement, as long as you manage your risk possibly. How do I get a hold of you to find that?
You're absolutely correct, Dave. Those folks that are in that danger zone, what is that? That's 10 years before you retire, 10 years after you retire. Man, if you make a misstep in there, it can really mess up your retirement plans. Give us a call, and let's walk you through our financial x-ray, 863-382-0037. And then join us every weekend for the Statler Financial Radio Show, 6 a.m. and noon on Saturdays, 10 a.m. on Sunday mornings on your sister station, News Talk 7:30 a.m.
And I thank you so much. Back here again tomorrow morning as well. You enjoy the rest of the day, my friend. We'll catch you then, all right?
All right, buddy. Have a good one.
Thank you. It's 105.7 Light FM and Statler Financial Services, Phillip Statler.
Folks, again, I want to thank you for joining us today. And I'm serious. This market, nobody knows what it's going to do. I mean, we've seen a little bit of a decline, 5% over the last couple of days. And nothing to say that it's not going to bounce back up. But it does tell you that there's a volatility out there. And if you are in that danger zone, if you are 10 years out from retirement, man, if you make a misstep now, it could mess up your retirement plans. Let us walk you through our financial x-ray. Do it right now. Give us a call at 863-382-0037. Tell them you want a financial x-ray and schedule that time to visit. Do it right now. Hey, I look forward to speaking to you again tomorrow. Have a great rest of your day.